Greetings, Dr. Jeffrey Scott. This is my weekend market update for 11/5/2023. My email address is hgsidoc@gmail.com. My title today, Bullish Thrust from Support to Resistance. Will the markets break through to new highs? If you're new to my channel, please hit subscribe, hit the alarm. You'll get notice when I put these up. I don't keep a mailing list. I try and do this every weekend. I've done one for at least 20 years on the weekends, and I just don't know when they pop up. It depends on my day job work and travel schedule. As always, it's for educational purposes only. Anything I say should be taken in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm an independent, quote, educator. I've got nothing to sell you today. I've got indicators on a couple of packages. But this is about education. Anything I demonstrate, I've paid for. No one pays me to say good or bad things about them. And trading involves risk. You are solely responsible for any investment decisions you make. I do this on a daily basis when available at stocksanddocs.com, where today will be probably an hour in length. The stocksanddocs.com videos are typically closer to 8 to 12 minutes. I always like to look at the major markets to start with, and there's no question the major markets were on fire. If we look in yellow at the major markets, you could see 5.1 on the Dow, 6.5 on the NASDAQ, 5.8 on the S&P, 5.4 on the NYSE, 6.6 on the NASDAQ, and then the big winner on the equity side was the Russell 2000. You could see shorting the VIX got you 12.5 as volatility came out of this market. And small cap growth really moved up as the week went on, and you could see ARC Innovation was up 5.6 on Friday and 18.60 on Roku and others that had positive earnings. This market has had a big move. We'll look at it in the charts. The question is bear market rally or up to new highs or notional new highs by year end. Over on the right, you can see how far we're off the 52-week lows. Notice that the 52-week lows are going to move forward because the actual low in the market was closer to October 13th. And you can see over the 52 weeks, from the 52-week low, the Qs are up now over 40%. And the laggard is positive now, 7.9% IWM. Over 5 days, all the sectors in the S&P 500. Remember, I made bounce between 500 and 1500 during this presentation, but in the 500 on the week, they all were positive. On Friday, the only thing down was energy. This is a tool called the Q Edge. It gives me a sense of what the markets are doing. Think of it of a heads-up display for the stock markets. On the right here, it tells me on Friday, 91% of the sectors were up, 92% of the industry groups, and 87% of the stocks. That is a bullish day. This here is, and we'll talk more about buckets, but in the S&P 1500, this is looking at 1500, not 500. 25% of the stocks in the S&P 1500 closed above their Bollinger Band. In the bucket analysis, now if a quarter of the stocks in the S&P 1500 are trading above their Bollinger Bands, then you are looking at a overbought short-term market. So that's one thing that is new. We've gone from oversold short-term to overbought short-term. If we look at how strong this week was, it turned around the entire month. Here's the week, almost all green. And notice when you look at 10 days and a month, you see more green than red across sectors, industry groups, and stocks. This is another Q tool. It's called Market Breadth. And I look at a number of different things here. We're going to start with this green line here, which is basically the 13-week or 3-month new high, new low. And this is a composite index of all the major U.S. markets. So notice it has gone from this area down here, which is definitely oversold, to up here where it's approaching overbought. Notice here that small caps actually turned up versus large caps, and you had sort of a flattening of the growth versus value. These green dots, I like to think of them as accumulation days, and when you start to see the green dots accumulating, the market's doing well. You can look here in yellow, stocks above the 50-day spiked this week, stocks above the 200 spiked, and then stocks above where the 50 is above the 200 is not really turned up yet. That's a bit of a laggard. You could see Over here, the AD really has turned up, as is new high, up down volume and new highs versus new lows. If we break this out on the NASDAQ, you could see a rapid move up in this 12-week new high, new low from oversold areas. Similar here with the NYSE, and you could see the broad-based NYSE is what we're seeing these breadth. Now, we talk a lot about things like Hindenburg omens. Here's the last omen back here, and this really was giving you a signal before the market sold off, although it was a more modest sell-off. And I could do the same thing looking at the Dow, the Russell 2000, the NASDAQ 100, the S&P 1500, and the S&P 500. This is just a fantastic tool from my friend Sagar. And you could see when you look at the S&P 500, which is more dominated by the large stocks, you can see that the new high, new low ratio is probably a bigger concern. All right. Problem with having multiple monitors. Here you go, is you lose your mouse. All right. Over here is from Nick Drendel. This is another heads-up display that I use during the market, and you could see on Friday a very strong market. Look at ARKK leading the way. You could see we closed above the middle of the day across the board. You could see that we've now taken over the 8 and the 21, and at least on the Qs, spiders, and diamonds, we've taken the 50-day and the 200. So this was a pretty massive move week. You could see over a 5-day change, everything is green, and on Friday, biotech, which has been dead, it's been down 8% over the last 50 days, really had a good day on Friday, as did gold, China, solar. So I'm going to show you some pictures that suggest that rather than leaders breaking out and getting stronger, that this was a junk off the bottom week in the markets. Now, easing rates, the Fed being dovish, are we getting close to a pause? Are we at a pause? Will we not know that the last rate increase occurred quite some time ago? Probably. I think that's very possible. You could see that the 10-year, but time will tell. No one said they're done, but they could be. The 10-year came down, the 30-year came down, and shocker, those coming down, you see yellow, the S&P going up. Is there a recession coming? The 10-2 is close to correcting the yield curve inversion. The 10-3 is increased back to zero or improved back to zero, but it's not nearly as close. Now, what could be driving the inversion of the inversion, the reinversion? Two things. Either the Fed starts cutting and the 2 years drop below the 10, or the higher for longer theme causes the markets to raise the far end of the curve, the 10s and the 30s. Don't know which is occurring here, but we know the Fed has not cut yet, so it's really probably the higher for longer crowd. If you look here at credits, the U.S. high yield index option adjusted spread, which is a measure of credit risk, which spikes during or before recessions in gray bars, really isn't spiking here. And if you look at the Philadelphia Fed diffusion index, we dropped back below zero. But as long as you're above -20, you don't see recessions. Now, the weird thing here, this is a rare time. We went from -20 to positive and back down. But we have not seen the recession yet. So will there be a recession? There always is. It may just not be anytime soon. Now, over the short term, stocks above the 200, stocks above the 40. Here's a 13-week new high, new low in TC2000. All spiking, showing that big breadth improvement and probably approaching a short-term overbought. And what really has me excited is you're not going to rally, you're not going to get these higher highs unless you get some support from the stocks, and you need to see highs versus lows improve. And look at this, we've gone green on the NYSE and on the NASDAQ. So for the first time in ages, we are seeing a lot of new highs and new lows. This also comes from Nick Drendel's spreadsheet. I mentioned the buckets. Here's your 25% of the stocks, the S&P 1500, trading above their Bollinger Bands. If you think about it, the Bollinger Bands are going to capture over 90% of a movement of a stock. If you have 25% of the market is above their bands, the law of averages says mean reversion, and those are going to come back in. They can get there by trading sideways or pulling back. And I think we are getting to a point where we're going to have to start thinking one of those is possible. No, we're not going to see Hindenburg now, but just pointing out that the new lows have dropped below 2% on both the NASDAQ and the NYSE Common. And even on the NASDAQ, we're seeing new highs. These are 52-week highs and lows. That's a positive. Why did I say it's junk off the bottom? On the left, take every stock in the market above $2 and 250,000 shares and rank them by performance by ERG. ERG stands for EPS rank plus relative strength rank plus group rank. When you go and you throw out the head and you throw out the tail, because as you can see here, there's very few stocks. But when you start up here and you go down this way, this means that growth underperformed. Well, this week everything performed well. It's just that these laggards really outperformed. You could see EPS rank was higher in the lower earnings per share rank. Returns were higher in the lower EPS rank. Returns were higher in the lower relative strength rank. So if you look at some of the leaders, Roku, Affirm, stocks that are well off their all-time highs, which have had great year moves, were the ones that led this week. Look at the change this week. Generac used to be $500. Palantir, someday this probably goes high. But you could see here AMC Entertainment, Penn, a lot of stocks that have Peloton that had sold off in the past. So this is a junk off the bottom week. Is that how you want to build a new rally? I'm not sure. I think you need the generals to go first, and then you bring the privates. But in war, you don't send the generals to the front line, you put the privates. So maybe this is the beginning, and maybe they'll bring the generals along behind. Know your news and earnings. No surprise, Fed has a meeting last week, and this week the Fed heads with those arrows on the left are out in force. There's more than that. As you can see, note Veterans Day is Friday the 10th, and we got jobless claims on Thursday. There's other important things such as trade deficits, credit, inventories. But I think if the market moves this week, it will be the impact of the Fed speaking, and then on the right, the earnings. Will the Fed heads come out and reiterate they're done for a while in a more dovish tone, or will they try to walk back the market's perceptions? Here's the earnings, lots of stocks, and I think you've seen this earnings period as much as others. If you reward on earnings, you get a major benefit, and if you don't, you sell off. But something like Apple, even though their earnings were poor, they actually did okay. Yeah, I mean, you think about it, how far Apple was off after hours, and then they ended up the day down, but not down nearly as much. Market thoughts, sizable broad-based gains on the heaviest week of earnings for the Q3 season. We got the trifecta, lower dollar, lower yield, and lower oil. 10-year notes dropped a bunch. BOJ less hawkish on the unwind of carry trades. U.S. Treasury reduced Q4 borrowing. Short sellers covered positions before stronger seasonality. We're in the strongest part of the year. Now, to me, technicals trump seasonality. I don't ignore that this is a good seasonality time. And then Fed Chair Powell's conference and the report were deemed less hawkish than feared. This was a week to add. I probably was too cautious, but I did put money to work, unwound my contras. Monday, still not all in. My timing model is improved, but it's cautious, as I'll show you. We're approaching trendline resistance, so a little backfilling and sideways movement would not be surprising. And my guess is that this is a bear market rally. It was the blow your face off variety, but still more work to do to turn the indices and most of the stocks back into uptrends. So again, if you like this stuff, and now I'm done with the showing slides, I'm going to go into wealth charts and maybe one other program, and take a look at what I think the markets are doing. And before I do that, and I just want to show what's tempering my enthusiasm a little bit. This is TradeStation, and this, you know, as I said, I'm not here to sell you anything. I'm just here to show you what I'm seeing. And one of the things that I like on TradeStation is that Sagar's Q tool has a really good auto trend line drawing. Now, there's auto trend lines in a lot of platforms, but this one seems to be the right balance of too little and too many. If you look at Spider, Qs, Diamonds, and Russell, and you look at all of them, we're sitting down here with a constellation of support lines. There is no question we were at major support. We are getting into areas where you have lots of resistance potential. This is the Spider. Big time resistance right above us on the Qs. Little ways to go on the Diamonds, and we're just breaking through the first line of resistance and could run up to 178, which is another 3 or 4% on the Russell. I point this out only to tell you that there are a lot of ways of looking at what's going on, trend lines, moving averages. I do think that we are at a point where we need to be aware that we are getting close to what could be tougher sledding. So let's look at my timing model. And I forgot to save it. There's one change in this model. And the change in the model is this. I'm going to move this over here because this is the triggering day. And I am going to put a yield sign. Why? Because we got to be a little bit less hawkish right now, or less bearish. We look here at the spiders. The spiders are pretty much need a caution sign too. The spiders are right at the level where they're going to get above their 30-day or 30-week period moving average. So there's still red bongos on everything until we get to the diamonds, which we'll talk about in a moment. But we are definitely seeing improvement here. Like I said, it's good, but still cautious. So just below the 30-period WMA on the weekly spiders, weekly bongos red. Interesting, exciting, not quite there yet. So I put a caution sign. Qs clearly took out the 30-period WMA, but has a red bongo, caution sign. When I go red caution, the next sign is typically a green, although not always. The caution sign will drop off if we drop below the 30 period. When you look at the Russell, and we'll talk what this white line is, but this is the October 13th lows, which we've hit a number of times. Still below price in red, so it stays a red arrow. And then on the diamonds, you could see they deserve potentially, let's look at the data window. The 30 is at 340, and it is, whoa, 7 cents below. So this one I feel even better about, but it's still going to be adding a cautious sign because we're not technically above on price, but boy, are we almost there. And in fact, I am going to put a double here, and I'm going to put a caution, and just so I don't forget that we're close to changing, I'm going to put maybe we got that coming. So bongo went green, not yet above, but we are very, very close on the diamonds to turning positive. So much better than we've been. Not an all out buy. And better is better. I just leave it at that. Let's go look at the indices. Let's start with the 5-minute of the spider and just look at the week we had. Okay, so last Friday was the 27th, and you could see we pulled down into the close. On Monday, gapped up and traded higher. This is the 5-minute on the spiders. On Tuesday, pulled back for the first few minutes, traded higher. Wednesday, Fed day, and you know what time this is. This is about the time Powell comes on. Powell starts talking, and the markets went from sideways to a big gap up and rode higher into the rest of the week. So this should be a pretty big bar on the daily chart and not much of a topping high. And you could see here on the Spider Daily that we've had a great move. I was thinking we'd pause here. We blew right through. Um, this was the decision. Will we pause or will we break through to go here? Right now, we're taking this path, but we've got this trend line up here to be concerned about. We've broken through the 50. Hard not to be bullish here. Look at the volume this week. Look at the MACD switching. So we're in a nice run. Now, do we take out higher highs and get higher lows? We haven't yet, and we need that for an uptrend. So it's something to watch, but this is why I put more money to week. It's hard not to want to be a little bit more bullish this market. Here's a negative thing. This is the channel that's been respected all the way back to July of 2023, where this bottom is held multiple times. False breakdown here leads to a big run, and it stopped here. So we're right into that resistance on the channel. Remember, there's trend line resistance. This is channel resistance, trend line resistance. You broke above the moving average. On the diamonds, we're in this Darvis box, but we're right up against trend line. So an area where it wouldn't be hard to see a reason for the market to stutter here. Not necessarily drop. Same thing here on the Russell, which we're running into the 50. And on the VIX, you could see on the week was down 29%. Now, does that include, let's see, sometimes the VIX updates again the next day. Let's see. 11.3. Nope, that's it. You can see the VIX came off a cliff. And one of the drivers is the dollar's at risk here of closing below this box, which would be bullish for the market. On the commodity side, gold is off the highs despite the dollar coming down. Still feels like there's plenty of risk in the market, but it did pop on Friday up 0.3. Silver was up a little bit better, but gold is above the moving averages. Silver still has to get above the 200. We can see silver was up 1.6. Oil has eased off. Again, I don't feel personally like the tension in the Mideast is gone, but oil has come down a bit. Natural gas continues to do sideways. And so if the dollar was good, how about the 10-year? Now, if you want to be anti the market, you could say, yep, from resistance to support, and now it goes higher. We'll have to see. That's something to be concerned about because you can go back and look at the dollar, and just like I'm concerned the indices have pulled into resistance and are likely to pause their move, the dollar has pulled into support both the box and the 50, and the commodities have pulled all the way back to their 50, and these are daily charts. If we look at sectors and we look to see if anything is doing outstanding compared to the S&P 500. So I usually stand back and I look, and what do I see? And again, everything was up on this week from the S&P 1500 sectors. All but one were up, I believe. No, I think they all were up on the S&P 500. I'd have to go back a little bit. I don't feel like doing that, but I can look at it over here. All right, apologize. I do this so often, sometimes the weeks run together. Yeah, we did have some, that's 1500 as well. Let's see, on the week, all the S&P 500 sectors were up. So we're looking at relative strength compared to the spiders. These are some ratio charts. So utilities here and real estate weakened into Friday, but they're still doing well, relatively well. The discretionary gave it up. Technology is the star. So I like to remind myself as the week goes by at who's leading. So I typically will throw in a, all right, Jeffrey, you do this all the time. Shapes, objects, that's what I'm looking for. And let's just put a star up here. And that way I'll remember what was leading on the weekend. Financials improved quite a bit. So did some communications. And look at what's doing horrible. Now, I'm wondering if there's going to be change in healthcare, and I think we're already seeing it. And I think it's time to start thinking about buying some biotech. And biotech is tough because it's not just about earnings, it's mergers and acquisitions, it's data readouts, it's surprise FDA clinical holds, it's new toxicity, it's new competition you didn't know coming. But notice here how XLV is the worst performer right now versus the spiders. But look at what's happened over the last couple of days on biotech. Biotech has been horribly weak for some time. Um, I think biotech is interesting here. And like I said, you can look at individual stocks, or if you want to avoid individual stock risk, you might consider perhaps looking at ETFs like LABU, IBB. Now, one thing to be aware of, they're not all made up with the same components. So one can outperform based upon certain things, how much Moderna you have, or how much Lilly, or Novo. But biotech looks different than XLV. Then I go into my scanners. And folks, there are a lot of great programs on the market. I can do this analysis in other programs as well. And for many years, I did it in a program that I was very fond of called HGSI, still very fond of HGSI. The learning curve and what you get for the price in wealth charts is why I spend, excuse me one second. Sorry about that. Why I spend most of my time looking at wealth charts, just because the retention and the people who end up using the tool is much greater than HDSI and TradeStation and Thinkorswim. They all have their merits. And like I said, I still think HDSI is an awesome program. It's just a learning curve. I've learned the curve, and therefore I still use it every day. But for these programs, wealth charts, and the stuff that Rob Hoffman, who's such a great guy, has put into this program at the annual fee, the best that you get is during the Wealth 365 events. That's why I use it during this presentation. So if I look at the heat map, now you have to know your product, and the heat map here will not finish until the market closes for the day. That's not at 4 o'clock. It's after hours as well. But you could see a sea of green on Friday. No surprise, big move up in the market, broad-based the week. Wouldn't it be nice if we could pick the time frame? So strength in the market. If we look at sector scanner, now I haven't looked at this week. You could see that that's return to sector. Okay. The only place on Friday I mentioned that was down was energy. You could see it here. Over the week, everything was up, and look at these numbers. Energy was a laggard. It was still up 1.61%. Now, the algorithmic score tells you that over a longer period of time, energy has been stronger. Well, I think we all know that. And, one of the ways of doing top down in this product is I could click the leading sectors. Let's take everything above 200 here, and let's make sure we got the leaders here, the 150. So let's just take those four. I hit compare, and now you notice that we've brought up all the different subsectors, and we can rank them by whatever we want to rank them by. Move that out of the way. So let's rank them by daily algos, and let's just go through everything. Let's see. Let's take this many. Right clicking and then hitting, or should be hitting the shift and then left clicking. And then if I want to see what stocks are in these, I can clip it again and rank them by daily algo. And let's take this all the way down to say 700. So now I've taken the best stocks that are in the best industry groups, and I brought them all. Let me try that again. I'll just start right. And then I can add that to a watch list. Now I'm going to make sure my watch list here is the weekend review, which is my long list. Throw them in here and apply. And so I just added these to my review. And while I'm at it, so I don't forget, let me come back in here and let's hit the save layout. because I added some changes on my signals. So that gives me a sense of what's working. Now, once I have those, I could look at them in any of my tools. Now, I like to start with I'm bullish, so let's look at the bullish view, looking at my market basket of ETFs, industry groups, sectors. So I look at three things. I look at flames, which I don't see any here. I look at arrows, which tells me things are trending better. I look at the number. I only have one thing above 700. 850 is top, so we're not super strong. MLPs are up at the top. Bonds, uranium, which we talked about last week. Bonds, MLPs, insurance, gold miners, gold, natural gas, aerospace. But that's a big drop. So despite the fact we had a strong week, I don't have the leading technology type indexes or sectors, and I'm not looking at a time frame here that is slow. I'm looking at a time frame that is not even looking at daily weeklies. So that gives me a little bit of pause there. Now let's just throw that weekend review in here and get an idea, and this is a larger list, not just the ones we just identified, if any stocks come to the top. And this will take a few seconds because there's a lot of stocks here. One way of using this program is not to use my scanner. Not everybody has my scanner, and this is a built-in tool in the market, and one that I like to use as well. Is I'm just looking for the same thing, that wealth score, as well as the arrows and the flames, and I'm looking at individual stocks, and that list was very big this week. It's about 2,300 stocks that made it to my bullish criteria. It doesn't mean they're all good stocks by no means. So I'm going to pause a second and let it finish running. All right, I actually did an audible and switched it to the Russell 3000. So you could see one of the things that is leading here, and it didn't have a great close on Friday, though it was still up over 1%, is strategic education. Last week, I think I mentioned that some of the education stocks were doing very well. Notice it's not 850, it's 880 at the top. So one thing you could do is start looking at these, but keep in mind these are stocks that have all been moving. And so they may not be at opportune buy points. So let's just look at an example at ChemMed. Would I buy ChemMed here? No, it's at 100 on the high jump bar. But I would have liked to have found ChemMed there. And when you look at the stocks with my CAT scanner, this is exactly what you're going to find. And notice the gap, the volume, the breakout, the momentum dots coming out of a squeeze. Look at relative strength and OBV. You can look at all of them. You're going to find that day over and over again. Cleveland Cliffs. This one, what a move. And there's that day right here, taking out the 50 and the 17th. Did I chase this? No, it's below the 200. I don't usually play there. Crane Company, there's that day. Mr. Cooper, gosh, big financing on houses. There's that day. So a lot of these have broken through and run, but one way of ranking or what's really moving in the market to get a sense, and then sometimes you might want to drill back and find stocks in the same industry group that have not broken out. My way of doing it is different. I like to use my scanner, which is CAT scan. So I have a number of signals that I look at. They're boring, okay? I'll be the first to admit. I'm not the most creative on names. I should have called these like Hyper Y, a B12, whatever. But no, I have dots. The top dot here is when I get a specific type of a gap. The second dot down is volume. Volume is the fuel that drives a rally. The third is a specific type of a breakout, a move away from chop. And the fourth is a momentum signal that I developed. The yellow dots here is the squeeze. Same thing that has been popularized by John Carter and without the rate of change indicator that he uses in his. The green dots tell me the day in the next 2 days it comes out of a squeeze. These reds and greens are the Wilder PSAR, and these are single candle reversals, a red candle low or a green candle high when available. My charts have a 17 in green, a 50 in yellow, and a 200 moving day simple in red. This here is my proprietary high-low oscillator. It measures extremes, looking back 200 bars in extension to the upside when it's a positive number or to the downside when it's negative. These are standard wealth charts indicators here, which is relative strength versus the WMA, and then this is on balance volume. What I'm looking for are stocks that have a particular pattern that pull into support and then break out with dots. So I developed a scan inside CAT Scanner. I call it pullback and uptrends. Market's stronger this week, so I'm going to move my minimum price up to 5. I am going to move my volume up to 500,000. I want options here. I want stocks to have at least one bullish dot, no bearish dots. I want a reversal in bongo within the last 9. Since I require the bongo daily and weekly to be green in this scan, this tells me that short term the stock was pulling back and it reversed within the last 9 bars. And as I mentioned, I've got bullish daily and weekly bongo. Apply changes. And so here are just the columns of what I talked to you about before. EMS, I'm not going to go into today. It's a shorter term oscillator, and you can see the arrows on the buy or red on the sell. I rank the stocks by dots, so by definition, every stock here is going to be in a longer term uptrend. How do I know that? The weekly bongo here is green. The shorter bongo has given me a pullback, so the daily pullback and switch red to green in the last 9 days. I have to have at least one dot. Here's Cardinal Health with 3 dots, volume, breakout, momentum, and then the gap dot came off because it closed off the highs. It also had an EMS signal, relative strength, and OBV. Is it extended there? Yes, and kind of similar to last week, GASS. This is something that I'm interested in, and I will be watching it, but it wouldn't shock me if it doesn't do this before it goes higher. Doesn't mean it won't go higher right off the chute, but that's kind of what I would expect. All right, the next one, and look at here at relative strength and OBV. Evolent Health, a little bit lower in the pattern, and one I don't like buying a lot below the 200. To me, it's too obvious resistance. Expedia broke out. Now this one is very interesting to me. Is it overly extended? Well, if I look at this weekly chart, it's come off of 121, so it's still well below, but that's a pretty massive move. You can see we're only at 71%, so it's not the most extended. Look at the massive volume, and let's see if the earnings are out yet. We haven't put the earnings in, or the program hasn't updated the earnings. Hopefully they'll be updated this week. So Expedia, big breakout above the moving averages, great relative strength in OBV. Funko, FNKO. Again, I don't like the close here after a big gap up. And Shooting Star, that typically is a pattern that goes down further, so I'm going to skip that. GoDaddy, another earnings play. You know they had earnings because of you. Oh, I thought they had earnings. Oh, my bad. I'm pretty sure there was earnings under there. I just don't see it. But GoDaddy had an EMS with 3 dots, fired the day before, gapped open, traded higher the rest of the session. This one's at 100 on the high jump. It's extended. IEP, Icon Enterprises. This one, I don't love this stock, but it has a huge dividend, double-digit dividend. If you can get a rally in the stock, massive volume, breakout momentum, relative strength, OBV picking up, definitely not extended, and you can get 11 or 12% dividend. For some people, that would be exciting. So I think what you should be seeing here is I'm looking at all kinds of different sectors here, and they're starting to look interesting. DraftKings was another one that had massive earnings with a gap up, but the earnings are not yet in the program. It's not at 100%. Relative strength and OBV look good. Closed at the high of the day. This one looks to go much higher. CBOE, what a beautiful chart. And here it is. There's your little pullbacks and a breakout on Friday. 3 dots, relative strength and OBV, not a cheap stock. Now I mentioned to you biotech looks good. So I've just given you a bunch of interesting stocks. Now, sometimes I want to look not at pullbacks and uptrends, but what about things that have been on the bottom that are getting some interest or have pulled back and don't meet one of those criteria? Because on my bottom poppers, I'm not requiring well, I'm requiring a very short reversal off of the low, and I am requiring the Bongo Weekly to be bearish. So these are stocks that are falling that just recently on the short term got a uptrend signal. So let's look at ACAD. Now, are these my favorite stocks to buy? No, these are junk on the bottom. But that's what was working this week. So running up into its 50. Again, something like this, a break above the 50, it could run quite a bit. CELH, this one has its earnings come out. Big pullback here. Earnings are this week. You can see it's coming. You have breakout volume, momentum, relative strength, and OBV. Um, any of these that I remember from my weekend review. Braze is one that looks interesting. And again, why isn't it on the other list? Because it had a longer term downtrend. But you could see it's reversing. I also sometimes want to look for rockets. Rockets are stocks that, in my book, don't have any bearish dots, and they have a bongo that switched within the last 5 days. Bongo daily's bullish, bongo weekly's bullish. So if I just rank these by dots, something like FNKO, which had a big move right here. Qualies, you could see this is a rocket. Don't know anything about this stock. RGA, Reinsurance Group of America, kind of a loose rocket. Rapid 7, again, another loose one, but a big move up here. And then I look at all the stocks that have momentum and disregard everything. And you'll see things like DigitalOcean. Again, is this the time to buy it? It could be. And there are people out there who have probably made a lot of money buying fallen angels that start to give you volume, breakouts, momentum, relative strength, and OBV. I also go by the saying nothing good ever happens below the 200-day simple moving average, and this is well below. But I've designed my scans, which are in the program, just to help me find types of stocks. And what about bear retracements? Well, I wouldn't expect this list to have a lot of bear retracements, and this was not a week to find a lot of stocks to short. Now that might be a sign that the market is going to pull back because it's getting extended. But let's just look at my weekly short review, and ASIX was one of the few, and it's a $25 stock, but it's a stock that's already in a big downtrend, pulled into the 17 and broke down again. But you can look at the same signals that I look to the long side, and you could find the stock here. This is more interesting if I was looking at shorting the market right now, which I'm not. Here's a stock that's in a downtrend. You can see the weekly and the monthly are your friend if you're shorting. That on the daily, the bongo switched to green, and then it reversed on Friday with a weekly EMS. But you can see how few stocks are making it here. And if you've been watching these videos for any length of time, you know that I've been commenting that the number of stocks with more than one dot, and these are all 4s and 3s, was very small. So definitely a change in the tenor of the market this week. And if we go to biotech, because I told you biotech looked interesting, are there any things that are showing up? And look at how many biotechs have dots. So let's just look very quickly. Denali Therapeutics, strong sell-off, making a move here, 3 dots, got to get above the 200. IONS, a little bit loosey-goosey, but pulled back into the 50 and broke out on Friday. I like that. Ironwood is another one that's beat up. Arrowhead rather. Again, these are all beaten up stocks as you would expect considering how poorly biotech has done. Beam is one that I looked at this weekend, breaking above the 50. One way to play biotech, and this is not a pretty chart, folks, I'm just telling you before I put it up, is to look at something like LABU. And let's just blow this up to big. And let's give you lots of time. That's what I want. In fact, let's just take this to a weekly chart. LABU was at 187, and that was back in 21. LABU is now trading after a big move on Friday, up 14%, at $3.33 or 330, yeah, 333, 338. Um, at some point, biotech's going to participate. It looks like it already is starting when we looked earlier. This is such a cheap stock. Do you just buy some of it and put it away for a while? Not advocating this as a great looking stock, but at some point, biotech's going to go higher. And I'll tell you what I'd be concerned about is you'll probably see some reverse splits here, but those don't mean anything. It just means if you buy 100 shares and they do a 4-to-1 reverse split, you only got 25 left. It's still worth the same amount of money. So I'm looking at this as sort of a long-term, do I want to build a position in biotech? It's been a leader in the past. So we've looked at the markets. My overall stance has become more bullish, still cautious because I haven't triggered my market timing signals. We are getting close. Um, I showed you a number of ways that I use to find stocks that look good. I gave you a lot of positive names. I could give you a massive list this week. In fact, I had the longest list of potential buys that I've seen in ages. Um, and I do think we have to be careful. As I showed you in some of my breadth things, we've moved a lot very fast. So my expectation, I think we got some backfilling to do. It wouldn't surprise me or disappoint me to see us do a little pause to refresh. Not a big sell-off here. And then once we digest what happened last week, maybe we run into the end of year highs. I really will be much happier in this when my weekly market timing model goes to green arrows. Now watch what happens when I change this. Let me just do this real quick. Let me put these all pink, 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 and pink. Let's change that to a daily chart. A faster timing. Above, 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 and everything is green. Now, long term, using the daily charts in this analysis is too whippy for me. That's why I use the weekly. On the monthly, the Qs are the only one that would be getting the green arrow. So we have definitely improved. We look better. Have an awesome week in the markets. Thank you for joining me this week and every week, and we'll talk to you soon. Come see me on stocksanddocs.com.